Day in particular, we did breach that 4,400 level momentarily, if you like, but still we did get there.
A fantastic day for the Australian share market with a pretty strong gain, given that we did see Wall Street flat. And you're absolutely right, the Australian market hitting the highest level that we've seen since May, breaching that 4,400 point level. Just to have a look at why that 4,400 point level is important, it's because we have seen the Australian market trending in a range between 4,000 to 4,400 points. And if we have a look at the Australian share market just over the last 2 years, this is what it looks like. And you can see that that 4,400 point level has been an area where once hit, we've come back down to test that around the 4,000 point level once again. So I guess a lot of people are watching this time to see whether we're going to make a jump to the previous levels that we saw in 2011. But altogether, I guess also a little bit of nervousness, because one indicator which doesn't work well in a strongly trending market but works extremely well in a sideways market is a relative strength index. And if we just bring up the Australian market versus the relative strength index, or the RSI, over the last couple of years, this is what it looks like. And what you can see is that we're near that top line. We're at a reading of 70, which does indicate that the market is looking overbought at this stage. So a little bit of cautiousness, given that we are seeing an overbought rating on the RSI. And previously, this has been an indication to a pullback, but it has been a fantastic 5 weeks of gains for the Aussie share market, the longest run that we've seen since August 2010. Part of that was some news coming out of China, which seemed to boost the Aussie share market today. We saw Chongqing, which is a city in China, announcing a $240 billion stimulus city. Now, this is the 5th Chinese city to come out with a $1 billion or a multi-billion dollar stimulus package, and the market seemed to get behind that. In particular, the material space doing well. We also saw Shell boosting its stake in the Browse project, so Woodside getting a lift there, up by 2.5%. Telstra's worth a mention. It went ex-dividend yesterday, but managed to bounce back today. It did, of course, announce some job losses, so we did see a bounce back there. But if we have a look at the stocks which reached a 52-week high today, once again, we are seeing those high-quality companies with strong earnings really seeing investors' funds flow towards them. And we did see Flight Centre, Cardno, TPM or TPG, as well as HDF, Hastings Diversified Fund, all reaching a 52-week high today. So altogether, a great day for the Aussie share market. Let's hope we breach that 4,400 point mark and stay above it, so that we can go back to test those 2011 levels.
Indeed, and just on that, Julia, I can't get my eyes away from that RSI graph that you've got behind you. I mean, how much are you putting into that? I mean, how bearish a signal is that actually going to be moving forward?
Well, the RSI is a funny one because it doesn't work in a strongly trending market. That is, if the market is moving strongly upwards or downwards, it constantly gives overbought and oversold signals over and over again. But where it does seem to be quite useful is in a sideways trending market. And you can see what's happened in terms of the Australian share market really over the past year, where we've just been trending in between that range of 4,000 to 4,400 points. And in that, the RSI helps to identify when the market or the asset has reached the top of that trading range or the bottom of the trading range. So we are seeing the RSI at 70. You can see the last time we saw the RSI at 70, we saw a significant pullback in the market. And if we go back to this RSI here, you can see a significant downturn in the marketplace as well. So it does tend to be better in those trending in the sideways markets rather than trending ones. And we know that the market's been trending over the past year.
A couple of those reports that we got out today. Julia, I wanted to get your thoughts on Monadelphous. It really has turned into a bit of a market darling. However, most things that mining services space tends to be in favour. Once again, delivering what I think is the 11th consecutive year of earnings growth. Fantastic.
An absolutely fantastic result once again by Monadelphous. And this is a stock that trades at a premium to its other peers in this sector. And this result really demonstrates why. If we have a look at Monadelphous, it's really been riding that wave of the very large oil, gas, mining projects that we've seen here in Australia. And we saw net profit after tax rising by 44%, beating market expectations. Revenue up by a massive 35%. And if we have a look at revenue growth, it has been accelerating. In the previous 3 years, we've seen revenue growth of about 15% per annum. And in this result, we've actually seen revenue growth of 35%. So a huge tick there. Of course, if we have a look at some of its major customers, there are companies like BHP, Rio Tinto. So a big day for Monadelphous is going to be on Wednesday, when we do see BHP coming out with its results and its capital expenditure plans. But it does have, I guess, a lot lot of projects in hand at the moment, and that's going to keep it growing till about FY14. After FY14, I guess a lot of these projects start coming to a close, and what we want to see is the next wave of projects coming through to really help Monadelphous. But if you have a look at the return on equity for this stock, I mean, a result of over 50% over the past 3 years is just incredible. So Monadelphous shares doing well again, once again shooting the lights out, another record year, and as you mentioned, James, the 11th consecutive year of growth.